you really don't know what you're doing, much like a stop loss. If you don't use a stop loss, you don't know what you're doing. I don't care if you're saying that you're profitable and you have a broker statement that says, look at this, I've made XYZ% in the last 2 weeks, 3 months, whatever. Playing that game will eventually burn you. So you have to have a stop loss. You have to have rules to know when you're not going to be doing something. And it doesn't matter who agrees with it. It's your business you're running. Do you think Amazon cares what everybody else's opinion about how they do their thing? There's a lot of people that are very opinionated about how Amazon runs as a company. They don't pay their people enough. They don't do this. They don't pay enough to offshore. Whatever. They're not concerned about it. So you shouldn't be concerned about anybody else having their opinion about how you should be trading your business. Stay in your lane. Let them worry about themselves. Because I can tell you this, I've discovered the majority of the people on the internet that have a high opinion about other people or low opinion about other people, they generally are freed up with a lot of time because they're not actually trading themselves. So if you see these talking heads out there, they're very opinionated about you or someone you're following, it kind of begs the question, if they're so interested in me or you or what you're doing, what are they doing in their own trading? They're not minding their own business. They're not minding their own craft. So that would, in my mind, indicate that they have no idea what they're doing in their own funds. They're not making money. They're not counting their own stacks. So they're trying to mind your business. So you have to have rules so that way you stay in your own lane and you don't worry about anybody else. You don't care about what I make. You don't care about what anybody else makes or loses. It's irrelevant because you're not going to spend my money. You're not going to feel the pain and suffering if I take a loss. So why bother with it? And don't invite other people to do that in your own trading either, because they're not going to be sympathetic to you. They may appear on face value, but believe me, they're down deep. They're loving the fact that you're suffering just like they are. Although yours might be a very momentary drawdown or a stop loss being hit and you have a losing trade. The high opinionated people, they generally aren't profitable. And they're usually the ones that are very critical of other people, not just one person or one teacher or guru, but these ideas permeate this industry because 90% plus fail to be profitable. So it's easy for them to look for an outlet to discharge themselves. So to prevent yourself from having all those pitfalls where you feel like you got to do those types of things, start being critical of other people or yourself in your own journal, which you shouldn't do. You have to have rules. You have to have limitations. You have to have some kind of structure as to why and when you do or do not engage in price. Your opportunity doesn't necessarily mean it's my opportunity, and vice versa. If my opportunity may be perfect for me, may not necessarily be the opportunity for you, even as my student. So that's why it's important for you to bring your own individual, unique personality into this, because if you don't do that, if you fail to do that, you're going to be frustrated because you're trying to align yourself with the person you're trying to copy. And you don't know what I'm thinking. You don't know what concerns I have. You don't have the time constraints that keeps me from staying with a trade because maybe I'm getting ready to go on vacation. Or maybe my wife said, you spent too much time in front of these charts and you owe me some time. Or my kids say, hey, this is what it's going to be like, Dad. We got things to do. Or something else that's unexpected comes up. So it's important for you to have about what it is that you're trying to do as a unique individual, independent thinker. It's fine that you're learning from me or anyone else that's profitable and consistent and has a sound logic, but you still have to, at some point, make it your own. And there's nothing inherently wrong about that. You're not trying to reinvent the wheel. You're not trying to repackage the person. Now, I don't view it as someone repackaging what I teach. I don't like it when they rename things and try to sell it. That's obvious then. But for you to learn from me and then say, okay, he taught this, but he didn't put it in this order or refer to it on this time frame in this type of condition and this economic climate with the calendar. But I see this repeating over and over and over again. So should I ignore that because he didn't mention it as my mentor, or because I see something going on there? Should I log that and continuously in that to see if it's going to be something fruitful? If you do the latter, you're cheating yourself of your own individual model that brings in your own personal personality, and that's making it your own. I'm prone to do it wrong. What did he say? This can't be IC. ICT's too arrogant. He would never say something like that. No. I have found that most of my losses occur in certain times of the month where the economic calendar broadcasts it beforehand. And because I was falling victim to everybody else on, at the time, message boards on America Online. Oh man, I killed it in non-farm payroll. Okay, I didn't see them trade it, but I just read what they said they made. What? That means I'm missing out. Let me go here. And every single time I would regret it. And it would be less money in my account as a result. So I came to the conclusion that these people are full of shit. And I didn't watch them trade. They didn't even show me a broker statement. They just said they made this. And I later on that this is actually them to themselves and everyone else that would lend their ear or read their crap because they want to be coddled. They want to be nudged like, wow, you must really know what you're doing. And then they mentally, because they really blew their shit. They lost their money and now they're going to act like they got it all figured out when they really don't. And that's why this industry sucks in a lot of ways, because there's a lot of fakes. And they may not come out with the intent to be a fake or a fraud or trying to scam anyone. They may not even be selling anything. But if you take the time to listen to other people, and they're usually the braggarts, the people that don't really have anything to show for what they're saying, but they're really critical of other people too, they aren't profitable. They're not making money. Because believe me, folks, if people are making money in this day and age, believe me, they're going to shove it down your throat. They're going to prove it even when you're not asking for it. And when you said you've seen enough, they're going to still shove it down your throat. Think about it. This whole world right now, look what you're listening to. You're listening to me right now pontificate about things that probably you don't feel are useful to you, but they really are. Do you have a filter? Are you filtering out all these people that like to get on the internet, on Twitter, and do things and say things that they can't really back up with any evidence that those things took place? And that's how I fell victim to non-farm payroll. I listened to other people bloviate about how much they made. Maybe they made a profitable trade later in the day, but if 6 trades and the previous 5 were losing trades, we're only talking about how they made money on that one trade, and their net loss for the day isn't really being talked about. Is that genuine? No, but that's them putting on that mental band-aid. That's what social media has done. It's allowed people to put social band-aids on their character flaws. They virtue signal. Oh, look at me. I'm doing this for the poor. Look at this. I'm going to give a helping hands ministry to people that can't afford this and that. Well, if you're doing that, there's your reward. I don't get on here and talk about what I do for other people because I don't want that reward. I don't want that virtue placed on me because I say I've done something. The people I help, they know I helped them, and I don't want to be glad hand about it. And the same thing about my trading. I want my students, my genuine students, to come here or on YouTube with a pen and pad with a sincere desire to want to learn and lay down all your mental baggage. That means the stuff you're bringing in that's toxic, and also what your previous educators taught you. Put all that stuff down. You can pick it up later on, but if you try to blend all that stuff, like Wyckoff and supply and demand and Elliott wave and harmonics and this and that and the other thing, all that stuff is going to make it harder for you to learn what it is I'm teaching, because what I'm teaching is very easy, but the complication is you have to get out of your own way. And one of to get myself out of my own way was make very rigid rules around how I'm going to conduct myself in the marketplace. When am I allowed to do anything? And here's the hard time. When am I not allowed to do anything? Think about it. The sign says, don't step on the grass. Don't touch wet paint. What are you going to do? You're going to moonwalk across the lawn, and then you're going to put your initials, fresh paint. ICT was here, 2022. Bite me. I did stupid stuff like that when I was younger. I'm not proud of it, but that's human nature. Tell me I can't do something, and I'm going to start thinking about 20 ways I can do it and not get caught doing it, and then feel like I've done something good when it's not good. That's human nature. That's human nature. All of us have that. That's inherent in all of us. A child is not taught how to be a misbehaving little being. It just knows it by nature. Well, in trading, all of us are like children. Yeah, that means what? We can tend to do things to get ourselves in harm's way. And you have to have boundaries. You have to set them as the analyst, because if you don't do that as the analyst, the trader in you is going to listen to the gambler, just like it did when I was on Miracle Online. Non-farm payroll, man. It's going to move around. It's going to do this. It's going to do that. And if you buy this package here, it'll send you a signal. And if it's a red box, that means you sell it. And if it's a green box, you buy it. Know what the news is going to do. We know what the numbers are going to do. Man, I wasted money doing that. And I was among a lot of other people that did that kind of crap. All these systems that said, before the news comes out, we're going to give you this. And as soon as the news comes out, it's going to give you a red or a green box. Well, first of all, you're sitting there and you're waiting for red or green. Think about how that works when you're at a red light in your automobile. Are you really looking both ways and see if these oncoming traffic has really stopped on their end before your green light becomes? Chances are you probably don't do it. I know I have to yell at my wife all the time. And yes, I do yell at my wife when she's driving because she's not that safe as a driver. And I don't feel comfortable riding in shotgun with her. And one of the things that she does is she waits for the light to turn green and starts moving. But there's people that just generally think they can get through that light. And that's a lot. of what we do as traders when we don't have limitations. Just because you have time to be in front of the charts, just because you have margin in your account, just because these candlesticks are painting and you have time to be in front of the next session doesn't mean that this is the safest thing for you to do. Or, for instance, look at your chart right now on an E-mini S&P. Now, probably not as practical for people that are listening to this later on, but it's basically consolidating right now. It had a little bit of a rally up after the opening at 9:30, and we started drifting lower, and now we're consolidating. Okay, there are people out there that can't wait to get in based on the last 5 candles that's just printed because they feel like they're going to do what? Miss something. I don't feel like I'm missing anything because we have non-farm payroll conditions, and generally for those that have been keeping up and for those that have not really listened to this before or heard me say it, the way I teach my students is on non-farm payroll weeks. What is that? It's when the employment number comes out, usually the first Friday of every trade month, and they'll give you the employment number. I don't care about the data. And whenever these reports come out, when I'm looking at high impact or medium impact news drivers, I don't care what the data says. I don't care. First of all, if I cared about it, think about what you're expecting. You're going to wait for the numbers to be released, then open up the data and start reading it. Is the market sitting still while you're doing that? Hell no, it ain't doing that. It's not doing it. And my belief is it's already priced in to the market. And then what they're going to do is they're going to use that as sentiment. And people many times will get caught off guard. Not all the time, but in my experience, I've seen many times where the data suggests that it should go higher for that particular market, or it would be considered beneficial for the currency. Okay, that's how like Forex Factory would say something like that. And it goes the other direction. So that was one of the reasons why I stopped trying to decipher all the quote unquote fundamental data. That I don't think that's fundamental. That's hindsight. Because all those data points, they've been known about. They've been known about by more intelligent, more vested individuals, entities that really have a lot more money in this game than you and I collectively will ever. And because of that, they're greedy and they'll pay for information and they'll want to be positioned ahead of time and start fading these types of moves, because once it gets into the public's hands and eyes, it's already done. Like, it's done. What are you expecting to happen? So it's not the same as if a headline comes out, so-and-so country was just bombed, God forbid, in a nuclear fashion. Man, that's going to cause the markets to go nuts. You can't expect that. You can't know how to decipher what that's going to do for a marketplace. It's going to be crazy. And that's like a black swan event. Every individual event that's high impact or medium impact event, I treat that as that very thing, just on a very smaller scale. In other words, I'm expecting volatility to be injected into the marketplace. Something happens by that data being released, and the market is either organically or artificially manipulated. And what does that mean? Well, the algorithm is going to do what it normally does, or manual intervention comes in and they will reprice to a specific level. And it usually is immediate, kind of like an interest rate announcement coming out by FOMC, something like that. If the Fed comes out or another country comes out and says, okay, we're going to cut interest rates by a full basis point, something unexpected, boom, they reprice immediately. That's not buying and selling pressure. That's at central bank level. They're saying it's our currency, it's our commodity, it's our product, it's our good. And guess what? Who sets the price? We do. And we don't care if you're long or short, and too bad. Pound sand. Those types of events, you can't really predict. So what I like to do is wait for the news to hit the market and then basically go in the price and see if there is something that would be manipulated to match my narrative, my bias, my trading model. If those three things agree and the event has now been introduced to the marketplace, that being volatility based on the data that's being released by that report, then I'll go in and look to engage. But on days after holidays, and if it's like it is here, we had 4th of July in the US, it's a holiday in the US, the dollar based, and people are out there doing what? They're cooking hot dogs and hamburgers, swimming, getting sunburns, doing things they probably shouldn't be doing, having fun doing it. They're not trading. But the day after that, when we put our thinking caps back on, maybe you are a little hungover. Maybe you're a little tired. Maybe you're not really focused in on what's going on. And then you add to it that we have a non-farm payroll week where I teach my students on those particular weeks on Monday, Tuesday, and Wednesday by 7 a.m. You either have your trade on or you don't. And you stay on the sidelines the rest of the week. Come on, ICT, that's not fun. I could still find trades on Wednesday. You can. I'm not. There's lots of moves I've missed doing this. Lots of really big moves. I'm not oblivious to that, but I've also been saved by a lot of noisy choppy price action. And I want to be where it's likely to materialize in the scope that it's high probability. There's market symmetry there. Everything's lined up. Everything's in agreement. Dollar's up. Everything else is going down. I'm going short euro dollar, and I have correlated pair SMT divergence supporting the fact that I'm in the weaker of the two between cable and fiber. So that means euro dollars fail to make a higher high, and then it's going lower, more likely to go lower than cable, which is pound dollar. So all those things, that's a symmetrical market to me. It's high probability, all things, all factors considered, that's high probability. But I will never frame the day after a holiday as high probability, ever, because that market is ripe to be manipulated on a manual basis. That means someone can come in and do something that you won't expect. And I don't want to be able to look back and say, well, I usually lose money in that situation, and I took the chance today and I lost again. I wish I would have learned my lesson. I don't want to have that again. So what I like to do is look at the marketplace, respect the risk, come up with an idea, an opinion, and see if it pans out. And then when it doesn't pan out, in my journal, those entries are like this. This is one more instance where I'm glad I have these rules of engagement that keeps me from participating in the marketplace because I expected this and the model didn't materialize. This is what took it. Had I not followed my rules, I would have suffered a monetary loss with this idea. Now, am I critiquing myself? Yes. Am I being negative about it? No. I'm re-emphasizing the fact that I've done things correctly, but also recording the fact that if I was to follow the model or a model, I have lots of models, but if I followed a model that I had in mind beforehand, when I've already adopted the mindset based on rules of engagement, things that I have to know when I'm going to do something, when I can't do something, days after holidays, I am likely to sit still. But I'd like to obviously engage on the mental side of trading. It doesn't mean I'm going in and pushing a live account, but I'm usually going in sometimes with a demo. Sometimes I'm making a comment to my sons. I'll say, look, this is what dad thinks is going to happen, and let's see what happens. They love telling me when I got it wrong, much like some of the people out there on YouTube and Twitter. They live for that. But when I get it wrong, I sit down with them and I say, look, this is what dad was expecting, and this is what took place, and this is the reason why dad or ICT doesn't want to do these on these types of days, because I'm more apt to be incorrect. So again, if you know you're likely to have your arm tore off walking down 3 streets to the right from where you live, and there's a white picket fence, and there's a Rottweiler over there, and every time you walked by there, this dog's taking something from you, whether it be clothing, flesh, something. How many times you're going to keep walking down there before you realize it's probably not the best path for you to end up where you're trying to get in one piece? Now, I don't know where you're from, but I don't need to have decades of that type of experience before I learn my lesson. It took me a couple years, painfully, but it took me time and pain and loss to come up with these ideas where I'm not going to engage. And I don't care what anybody else thinks about it. I don't care how anybody else views it, because most of the time, people are going to be judgmental to you. They'll be judgmental to me, and they have no idea how I trade. They don't even know what it is I'm teaching you. They look at something, and because they want to make a name for themselves or they want to feel better about themselves, they'll critique something, and it's usually by ignorance, and they look like a fool. Don't take other people's opinion about you not wanting to engage the market as something that should influence you. Laugh at them, because they're raising of importance, their self-awareness about themselves, and they equate that you should view them as someone to listen to when they've brought nothing to the table as the reason why they should be listened to. And you're not going to get someone to listen to you if you start poking at them saying, you've done this wrong, you do this wrong. Okay, show me by contrast what it is that I should be doing. These jokers don't do that. So when I sit down with you and I lecture you, I'm telling you, I've learned these lessons through pain. Okay, I didn't learn them from books. I learned these from pain. I learned them from taking an account, placing it into risk in that environment, fleecing me, taking from me, not on one-time occasion, not on just a handful of occasions, but many instances where many times it equated to me having an account that was blown. I have no reason to hide that. That's the whole reason why I'm teaching the way I teach. I have suffered those things. So wasn't it natural for you to learn from somebody that has made mistakes before in other things? Sure. What did they do to hurt themselves? What did they do to help themselves learn better, quicker, without having all these pitfalls and these snares? That's what you want. That's a mentor. Someone that has gone through things and understands, okay, that's a problem area. And if you don't do these things and put these controls in place, you're likely to repeat that same thing in the future. If they are not equipped to see that and come up with a mitigation to it, some kind of, well, like I mentioned, mechanism. That means a filter, something that says you are not allowed to trade. You are not allowed to participate. You have to have those things. Think about it, folks. If you don't drink and drive and you stay on your side of the road and you don't speed, about 85% of the time, you're not going to have a car accident, and the people around you aren't going to have a car accident either. But sometimes there's individuals that say those rules don't apply to them. Well, it's the same thing with trading without a stop loss. Yeah, I know that. Yeah, that doesn't, folks. Listen to me, okay? And I know there's people in here that are teaching other people, even have YouTube channels, and they don't use stop losses, and they try to justify why they don't use a stop loss. There is no justification for it. Zero. Learn how to mitigate risk, then go back to teaching. Because if you're not using a stop loss, you are gambling. And the only thing you're teaching other people is, guess what? You're Nostradamus. You know what the market's going to do. Think about it. If you're saying that you don't need to put a stop loss in because you know where you're going to get out when your trade's wrong, what happens when it reprices aggressively and you didn't expect that repricing occur so aggressive, and it moves way beyond what your safe exit point would have been or what you're willing to lose? You're crushed. And if anybody's watched you trade that way, which conveniently they never let anyone see that, those individuals are learning to do that very thing in their own trading. Now, is that, in my opinion, and I think you would agree too, is that the right kind of leadership and or mentor or teacher when it comes to risking money? I would humbly submit no, because what they're doing is trading by itself is already inequity, and you have to have a way to control yourself. You have to control how much you risk, your leverage, the amount of money per trade, how much of a stop loss you're going to allow in terms of points or pips. You have to place a limit on that. What days of the week are you going to trade? Are you going to trade any old time? I teach what? A kill zone. And we're shorting. We want to see it go up first. That's what institutional traders do. They have mechanisms. They have to wait for the market to have an uptick before they can go short. So I adopted that with my perspective and price. I need to see what first. It needs to go higher. Okay, so where does it need to go to? Above some measure of equilibrium. So I'm having all these rules and these control mechanisms placed in my logic because it's an algorithm that's pricing these markets and it's booking them. And they have what? Control mechanisms, filters. So I'm aligning myself with an algorithmic principle-oriented trading model. But if you are teaching, or if you're learning from someone that's not using a stop loss and preaches they don't need to use a stop loss because they know where they're going to get out, what they're saying is they know what the market's going to do. Absolutely. So therefore, they don't need a stop loss. That is the definition of arrogance. I am not arrogant. I'm confident, probably sometimes too blisteringly confident for some, but I do have limitation. And to teach or to illustrate trading without a stop loss, there is no other way to say it, folks. This is the way it is. Those individuals that are doing that are saying they know what the market's going to do. Now, they may say it and believe it, but that's not true. I don't know what the market's going to do. I have to use a stop loss. I know it's likely to do this or that, but I have to use a stop loss. Why? Because I'm human. I may have done something wrong. I may have shirked a rule of engagement, bent the rules a little bit. I've done that in the past. I'm human. Sometimes I think, this looks like it's trying to do this. I want to do that, but it looks like it's doing this. And I'll just toss in something small. But I'm using a stop loss. Why? Because I don't know what the manual side of intervention is going to do. And nobody knows that. That's the risk that is always in the offing. You have to have that that awareness of that potentially harming you. And if you're learning from someone, or if you're trying to do this without using a stop loss, what you're saying is you have no boundaries. That means whatever the market wants to do to you, you're inviting it. Now, there are times when manual intervention comes in and a major repricing in the market asset takes place, and your stop loss necessarily will be of no protection to you. And what does that mean? You might have a 20 handle stop loss on your index futures trade. Now, I'm not arguing or making the case that 20 handles is the appropriate size, but let's just say for the discussion here, say you have 20 points, okay? And the market has some kind of major announcement comes out, or someone gets bombed. Boom, the market just gaps 40 handles. Think you can't do that? Stick around, because you're going to see stuff like that real soon. But what happens with your stop loss? Does the market and the broker say, hey, Jane had her stop loss at 42.50, okay? But it gapped 43.10. Oh, it can't move like that. Either direction, it can do that. No problem, given the right circumstance. They're not going to go back and say, okay, Jane's stop was at 50, so we're going to honor that and get her out, and we're going to mark to market in her case on that understanding. They're not going to do that, folks. They're not going to do it. So yes, you need a stop loss. Yes, sometimes your stop loss doesn't give you the protection that hold true that it would likely give you. That's the underlying risk. That's why this is not meant for everyone. And for some of you, you're probably thinking, man, this is something I didn't really think about this. I don't think I can do this. Guess what? That's probably true. And maybe I've saved you a lot of hardship and monetary loss, because you probably wouldn't learn until you lost a lot of money that you probably can't do this. But for those individuals that know that you've been bitten by the bug and you're not going to take no for an answer, you have to use a stop loss, because it's a rule of engagement. You have to have it. You don't know what that market's going to do. You don't know how far they're going to take it against your idea. And believe me, when I was a 20-year-old, I arm wrestled and I would pretend I was using a stop loss. I was like, okay, if it goes down here, I'm going to get out of that. And then all of a sudden it would start going towards it. And that's okay. Well, really, I'm willing to take a little bit bigger risk. I'll sit through 10 more cents in a move in soybeans against me, more than I would have. And that stop loss is not in the market yet. It's just open. I have a target I'm trying to get to, but I don't have a stop loss in. If you want to push it in, because that's what you're essentially doing. And that may sound crude, but that's exactly what it is. If you give the market the opportunity to abuse you, it will gladly do so repeatedly. Don't believe it? Lose and go back in again. Lose and go back in again. It's not going to feel sorry for you. It's not going to feel sorry that you didn't put a stop loss in and limit the amount of money that you're going to lose or could have lost. It's going to punish you. That's what it's there for. It's not here for your entertainment. It's not here for you to get better in terms of financial living. It's not for you. This is war, and you have to treat it as such. When people go out to battle, nation against nation, are they walking out there with wife beaters on and shorts and flip-flops? Hell no. They're going out there with helmets, plates. They're trying to get behind barriers like tanks and things that fortify themselves from enemy fire, because there's a risk. So if you're out there trying to do things and you don't have control mechanisms and measures in place, when should you do something? When shouldn't you do something? Applies to a stop loss. I'm willing to take a loss if it goes here, but if it goes here and beyond, I'm probably wrong. That's what everybody without a stop loss is avoiding, that notion of being wrong. And being wrong, folks, you got to warm up to the idea. That's the best thing to know in this industry. Are you wrong? Are you wrong about your idea or your outlook on the marketplace? Because if you are wrong, you're going to want to know it, because you're not going to keep throwing good money after bad. And as a young man at 20 years old, I didn't know that. I learned it painfully and very expensively, but I did learn it. Those and these are the discussions that none of the young hotshots that want to come here teach me an order block. Teach me an order block. Just give me the bias. Those individuals, and you know who you are listening, you're never going to learn how to do this as long as you hold on to those mindsets and think that's all it is. There is so much more that's going to be in your way. And you have not been here long enough, not under me, but in the markets long enough to discern where these things are going to creep up into your development, your trading, and everybody endures it. You're not going to be the guy or gal that just tap dances around these barriers, these pitfalls, these snares. You're going to put your head in the noose just like everybody else does.